Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, and it's May 1st. Happy May Day, everybody. Got a lot to go over today, so we're just going to jump into it. This week is going to be pretty jam-packed. We also got the Fed meeting, FOMC, on Wednesday. So the Tuesday and then Wednesday is when they give their announcement. Another big item this week is the jobs numbers coming out on Friday. So we'll get, the ADP typically on Wednesday, the weekly jobless claims on Thursday, and then we get the big one on Friday. So be prepared for a lot of volatility this week, as we got a lot to go over. And of course, the biggie would be the FOMC. Now, they don't expect any rate hike on this one. It's pretty much zero possibility. But they want to check out the wordings on it because obviously a few data didn't look so great. And they want to see how the Fed reacts to it. So let's start off with the personal income here for the month of March. So back in February, it was up 0.3%. Forecast for March was supposed to go up 0.3%. It came in at 0.2%. So slightly disappointing, but still it's up a little bit. Consumer spending, we had zero for the month of February. Nobody was spending anything, and we thought it would go up a little bit, 0.1 in March, and still nobody's spending any money here. Core inflation, this is the PCE, and what it stands for is personal consumption expenditure. This is when you strip out the food and energy, you get the core inflation, and this is what the Fed looks at for inflationary numbers here. So the last reporting back in February was at 0.2%. Forecast was supposed to be drop 1.1%, and it came in expectations at dropping 0.1%. Now it went from 1.8% year over year inflation, where the Fed's target rate is at 2%. It dropped now down to 1.6%. So instead of being at 1.8, getting us closer to the 2% goal, it dropped 0.2%. So this is going to be interesting to see what the Fed says about this with their upcoming meeting here, because again, that's what they're looking at. And part of the reason they raise rates is to stave off inflationary problems. And if this is being stubbornly low, the Fed may have to hold off on raising rates. So this might interfere with their rate hikes here coming up this year, especially when there's projected 3 rate hikes, which we've had 1 so far this year. Now we got some manufacturing numbers. We got the market manufacturing PMI for the month of April. This is our final number for it. We had another one reported earlier in the month, and that came in at 53.3, and the final comes in at 52.8 for the month of April. Also, we got ISM manufacturing for the month of April. We had a 57.2 for the month of March. No, they actually had an initial one. Same thing like market. They also have another one up there. Sorry about that. 57.2 earlier in the month of April. It was supposed to settle in about 56.5, and it dropped down to 54.8. So anything on these manufacturing numbers here, anything above 50 is considered expansion. So anything below is contraction. So there's still expansion, but obviously they drop. So something to keep an eye on. We've obviously been seeing some decent numbers out of the Chicago and New York, so we'll have to kind of keep an eye and see if they continue to move up or if they're going to pull back or not. So last but not least, we got the construction spending for the month of March. So February we had it jumped up 1.8%. Supposed to go up 0.5% in March, and actually pulled back. It fell 0.2%. So overall, not that great of numbers here today, so obviously that's going to be a little bit of a disappointment. But stock market's up. Part of it is a version to a government shutdown. We do have some earnings reports that came out as well. If you recall on Friday, it was the market kind of reacted to the temporary suspension of the government shutdown because they were trying to work out a budget and it hadn't been reached. So they basically moved it to this next week here. So a lot of that could create some volatility here if they can't get a conclusion to their budget, so they can avoid another government shutdown. So this past weekend, it was avoided, but it just got moved on for another week here. So just be a little bit cautious, be aware of this moving forward this week. Here's the bond market. Again, Friday we did end up because of the government version, so that helped us out in the bond market. Settled right at the 10-day moving average. We settled a little bit less than 10-day moving average. We even touched on the 10-day moving average. Right now we're down about 9 basis points. So not quite really ready for a lender repricing. So lenders won't really have worse pricing. It'll be pretty similar to what we saw on Friday when we finished it off. But again, as you can see, this 10-day moving average, trying to touch it, we get knocked down here. So we've got to be very cautious. It's not an easy one to get above, and it's going to be a tough resistance here for us. So be very cautious with the volatility of this week. It could help us or hurt us. So just be a little bit cautious here. All right, folks, so rates are about the same what we left off on Friday. That pretty much kind of concludes that. But if you guys want more data coming up throughout the day, just come over to Twitter. You can find me on my handle, Mike Bjork, and get updates throughout the day there. And as well as if you guys are in the market for a mortgage, feel free to reach out to me. I am a loan officer. I do help out other clients with purchases, helping them get pre-approved, buy homes, helping with investments to second homes to primary residences, as well as with refinances, whether they want to take money out of their property and do something with it, like debt consolidation, for example, or investments. Also, if they want to just go rate and term, if they want to lower their monthly payment, that's something else we can help them out with. All right, just feel free to reach out. We'll look forward to talking to you guys or seeing you guys again soon, tomorrow, as a matter of fact. Thanks for watching. Take care. Bye-bye.